because it's really it's easier for Alipay or an Amazon to become a bank than it is for a bank to become an Alipay or an Amazon. These are experts at the digital platform, and really, once they get to the point where they're able to buy a bank and license it in whatever domicile that they're interested in operating in, it's going to be, forgive me for being so blunt, game over for many of the incumbents who have not really prepared.
But do they even need to do that? I mean, do they, like Uber, do they need to actually approach it in buying a bank, etc., and all the legacy issues there? Why not? This is a new way, a new process. It doesn't require the same regulatory environment, etc., etc. I mean, that just destroys the existing model. And regulators will have to start again.
Yeah, look, you think about it, there was a lot of talking about banking, right? I think Bill Gates, over 10 years ago, said it potentially best. Banking as a function is necessary, banks are not. And again, if you think about developments in the cryptocurrency space, Bitcoin among others, the blockchain, it's a very different way of looking at banking, right? The functional banking, right? And a lot of old incumbents are terribly positioned for that because it's about a different mindset.
If you look at all that a bank provides, there are two things fundamentally, to a consumer. There is a store of money, a place where you keep money and it's safe, right? That's one part. The other is money at motion, transactions, advice. I think fintechs are all into this second part, payments, advisory, bonds for us. But that other function of the store of capital, store of value, you put money and then you take it back out 10 years, 5 years, or tomorrow morning, whenever you please. That part is still very much the sole domain of banks. A Paytm, nobody's going and putting all his money with a fintech. So I think that's one aspect where banks and licenses are still important. You need capital. So the point, I think, the euro making that when they buy a bank, the minute they do that with their massive market capitalizations, they will not worry for having enough tier 1 capital. So that will be the game changer.
The ultra high net worth individuals, everybody thinking that we will never go to a robo-advisor because they have their own family office that they can do, even if they basically take their things from there. Whereas the mass is retail business, that obviously we are talking about a creditor investor, and then this is the other game. But for ultra high net worth individuals or just high net worth individuals, maybe this can be the next solution, because the banks and this is how they perceive the client now, the banks just make money selling the products and they don't care about me anymore. I think I'd rather go to someone that is totally impartial to the business. So then I will go. When the banks realize about this, they will start to develop these apps or this fintech with it, because it's not about cost, it's about increment the margins for the side of the sales.